Hey guys, this is gonna be the update video for week 2 of the small account journey. So let's dive right in. Okay, so it hasn't been a great week. As you can see, the account is down to $300. This is about where we started. We're down approximately 30%, which translates to about $130. So nothing has changed. I haven't added anything to the account. The only thing is the Tesla put credit spread. Also, if you guys haven't seen the 2 YouTube short videos that I have posted this week, they're only about 1 minute. So go ahead and go watch them. And it's probably better to watch them before watching this video. So if you have a chance, go watch them and then come back so that you have the full updates and you're kind of caught up on what I'm talking about. But I'll also be going over some of them in this video as well. So let's hop into the Tesla put credit spread. As you can see, it's different from last time. The expiration before was 12/28 or 12/23, sorry. So it was expiring next week, and I'm recording this technically Saturday, December 18th. But it was expiring next week, and the stock price is currently at $932. So that is still below our strike price that we wanted it at, which was $980. And the entire market took a dip. So it's not just Tesla. The fundamentals of Tesla are still the same. No bad news came out that dropped this this dramatically. Okay, so when I rolled this, I received a $5 credit, and I'm gonna go back to our first put credit spread. So as you can see, it's the one all the way at the bottom. This is the first one we opened, and when we opened this, it's the $980, $975, and we received a credit of $180, and we put up a collateral of $320 because the width of the spread is $5, which means 5 times 100 because a contract controls 100 shares. It was $500, but you subtract the $180 because you're receiving a credit of $180. So really, you're putting up a collateral of $320, which is your max loss. So we received the $180 credit, but we were losing. When you're selling a put credit spread, you want the value of that spread to decrease because you sold it to someone and now you have to buy it back. But the idea is that you buy it back at a cheaper price. So if I sold you a apple for $10 and I have to buy that apple back eventually before an expiration date, I want to buy it back cheaper so that I make a profit. I keep the difference. And that's what's going on here. So that's what we want it to happen. But the value of the contract was increasing because we're betting that the price of the Tesla stock would be above $980, but it started dipping because of the inflation news, the tapering news, and also Elon is still selling his shares right now. So the contracts went up because the stock value went down, which is not what we want. So it was really hard to roll, and as you can see, we ended up rolling for $5 credit. This isn't ideal. You usually want more, but because our original spread was down so much, I was kind of surprised to get a $5 credit. I thought I would have to roll for a debit. But another thing I wanted to point out is that on Friday, I was working and I saw this go up at 11 a.m. Eastern time. And at this point, I checked and I could have gotten a credit for $130 to roll it out to January 28th, 2022 for the strike price of $1,000, which isn't bad. It's only $20 above our original strike price. So I would have happily taken that 130, and that would have went straight into my buying power because I already put up the collateral from the first one, and that'll just carry over because the width of the spread would still be $5. So it would have been a $1,000 slash $995. So the width of the spread is still 500, so our collateral still holds up. But what happened was I decided not to roll at that point because I couldn't record and narrate the video because I was working. I was looking at this between work, so I wouldn't have been able to narrate this. So I decided not to do it and wait till lunch. And I thought the premium would still be at about the same, but around my lunchtime, between 12 and 1, it was dipping pretty hard. It lost about $10 in value pretty quick. So when I checked during lunch, I had to pay a debit for the exact same thing, for the exact same roll. I had to pay a debit of, I think, $50 to $100. So I definitely did not take that. I was like, you know what? I'll just wait. I might not be able to record and narrate at the same time, but I will just wait and hope that the stock price just spikes up just a little bit, enough for me to get a credit for rolling out without pushing my strike prices up too high. And you get this credit because you're increasing your risk. You're taking on a little more risk, because rather than betting that the stock price will be above 980, now I'm betting that the stock price will be above $1,040, which is what I currently have. So you're taking on more risk, but you're also getting more time. And I think Tesla can definitely break above $1,000 between now and January 28th. Also, if you guys missed it, on Thursday after market hours, Tesla was above $1,000. But when market opened the next day on Friday morning, it quickly dipped back down to below, it was below $970. So this is the position we're in right now, and this gave us more time. So I'm just gonna have to wait on this, and I'm not too worried about it. I do believe that Tesla will rise in value, and if for some reason it doesn't rise in value, I will definitely roll it out again. I'm not just going to take this for a loss. I think Tesla will be trading 100% above the $1,000 share price in 2022. So, but this is why I said in the first video, I'm not telling you guys to follow this strategy, but this is why I said in the first or second video that my strategy is going to be picking a stock that I'm very bullish on and doing a put credit spread close to the money or close to the current share price, or a little bit below it. And that way, even if I have to roll it, because I'm so bullish on the company, I won't be stressing about it. Because if you're bullish on the company, your thesis is that, the stock price will rise, right? And Tesla is pretty volatile. It just, as you see Tesla moving down in value by huge amounts, like I think in one day Tesla can lose like $60. It can also jump up that much. So I'm honestly not too worried about this. This can look really bad. It says I'm down 3%, but I'm actually down more than that, because at this point I've received a total credit of $185, because the initial $180 and then the second $5 that I received because I rolled it. So that's a total of $185. Now, the idea of the spread is you want to buy it back to close it cheaper than someone paid you. So essentially someone paid me $185 because I sold this spread. Now I have to buy it back for a cheaper price. So this contract needs to degrade in value all the way down to at least 185 for me to break even or profit. So if at any point I see some profit, I might just take it and look for a better entry, because this scenario is not ideal. I mean, and 2022 is going to be pretty choppy because of the interest rate increasing, and there's still going to be tapering then. So, but the good thing is that Tesla has quite a few catalysts coming up and easily, hop up above $1,000 again. But other than that, I think that's it. Oh, actually, one more thing. So because this was down so much, and the expiration was so far out, or was going to be so far out, I was also looking at other plays, and I found that QQQ was the index. The triple Q was down pretty significantly. I was looking at it Thursday night, and it was getting pretty close to the 100-day moving average. And if you look at like a 1-year chart or a 2-year chart of the triple Qs, it rarely ever spends time below the 100-day moving average. So what I was going to do was buy a put credit spread a little bit below the 100-day moving average, and I was going for the $378 price. So I'm essentially betting that QQQ will be above $378 by whatever expiration I choose. And the one I was looking at, I would have received a $30 credit, and my max loss would have been $70. And this ratio could seem bad, but this is, in my eyes, this is kind of a guaranteed $30, because, I mean, if you look at QQQ now, I was looking at it at this point. This is when I would have received $30. I can't get that premium now because the stock went up in value. I mean, the market is very fair. The more risk you take, the higher the chance of profit, or the maximum profit will be. So at this point, I was going to buy it, or I was going to open a contract. But again, same with the Tesla thing. I wanted to record it during lunch, so I decided to skip out on it, which I should not have done that. And for future trades, if I can't record it and narrate it because I'm working or something, I'm just going to try my best to record it without narrating it, and I'll type up some description describing what I'm doing. Or if I can't record it at all, I'll just have to make a separate recording as soon as I get the chance and kind of explain what I did. Okay, I think that's all the updates I have for you guys today, or for this week. And I still have $100 in buying power, so if I see any opportunities come up this coming week, I'll definitely take that, and I'll definitely post it on YouTube Short. And then at the end of that week, I will do another update video, a more comprehensive update video on what I did and why I did it. So if you guys enjoy those YouTube Shorts, please comment and leave a like, so that I know people are actually enjoying those contents, rather than waiting a whole week to find out what I'm doing. I think real-time updates, or close to real-time, would be the most ideal, and then a weekly video would be a good way to wrap things up and go more into depth. And if you guys leave comments and questions in the YouTube Shorts, I'll do my best to answer them in the weekly update videos. So other than that, please like, subscribe, and turn on the bell so you're notified when I post the shorts, and you guys can see them as close to real time as possible. And I'll see you guys next time.